Hello everyone, I'm Nova Lui, Head of Investors Advisory at RHB Bank. Welcome to our monthly Investment Insight podcast to recap the key market movers and economic development that shaped November. Let's dive in. This November marked a big shift in global market. After months of excitement around artificial intelligence, investors start to take a step back. US technology stocks, which have been leading the rally, lost momentum as concern grew over lofty valuation expectation. On top of that, the cryptocurrency market faced sharp declines, adding more pressure on riskier investments. The reason for this are investors are becoming more cautious about the global economy, concerned about political tension, and realizing while AI is a major innovation, it won't deliver instant profits. The focus have moved from growth at any cost to show me the real return. As a result, defensive sectors are back in demand, while high-risk assets are under some pressure. This cautious mood is made worse by uncertainty around US economic data. A recent government shutdown of 43 days, the longest in American history, delayed important reports like job, inflation, and retail sales. Without these numbers, investors are left guessing whether the US inflation is cooling fast enough and whether the growth is slowing down. Every update from the Federal Reserve now matters more than ever. In times like this, missing data is like driving at night without headlights. You slow down, you play safe, and you look for shelter in defensive assets. This explains why markets have been volatile and why investors are holding back from big moves. With the global market are dealing with uncertainty, Asia was busy with major meeting and policy discussions. The APEC leaders meeting in South Korea set the tone for regional cooperation. Leaders from 21 economies committed to open trade, digital transformation, and clean energy. They also launched an APEC AI initiative and a roadmap for paperless trade. All these are clear signs that technology and sustainability remain top priorities. In real headlines, however, come from the sidelines. A meeting between US and Chinese leaders signaled a tentative trade truce. US leader called the meeting with China's top leader as a big success, rating it 12 out of 10, saying Washington will cut some tariff on Chinese goods, and in return, Beijing will resume key purchases. The overall tariff imposed earlier this year will be down from 57% to 47%. China has also agreed to allow rare earth exports and to buy 25 million metric tons of US soybeans annually for the next 3 years, starting with 12 million metric tons between now and January. Markets have already responded. Optimism around US-China dialogue lifted the Chinese benchmark with the CSI 300 and Hang Seng posted modestly weekly gains. November marked a historic leadership change in Japan, having their first female prime minister. While she pledged fiscal stimulus and stronger security measures, however, comment about responding to a Chinese attack on Taiwan sparked a diplomatic storm. China reacted strongly with filing complaints at the United Nations, issuing travel advisors, cancelling flights, and reigniting disputes over the Senkaku Islands. This rising tension between China and Japan matter because they influence capital flow, supply chains, and investor sentiment across Asia. Tokyo's Nikkei dropped sharply and currency market mirrored the volatility, with yen weakening beyond 155 per dollar. Against this backdrop, India offers a different narrative. The China Plus One strategy continues to attract investment into manufacturing and IT, helping Nifty and Sensex index reach record highs. This structural advantage from supply chain diversification positions India as a key engine for long-term growth in the region. Finally, let's bring it home to Malaysia. November was a month of resilience and positive surprises. With the economy grew 5.2% in the third quarter, putting Malaysia on track to hit the higher end of its 2025 growth target of 4.6%. Domestic demand stays strong, inflation remains low at 1.3%, and unemployment held at a decade low of 3%. Investment flows were equally impressive with ringgit 285 billion in approved investment for the first 9 months of the year, up 13% compared to last year. Foreign investments surged nearly 48%, with Johor and Selangor leading the way. This reinforces Malaysia's position as a key investment hub in the region. Malaysia is positioning itself as a regional hub in rare earth processing and value-added industry. During the ASEAN Summit in Kuala Lumpur, the US signed a deal with Malaysia covering trade and critical minerals and rare earth cooperation. Under the deal, Malaysia pledged not to ban or impose quotas on export of critical mineral and rare earth material to US, and to work with US companies to speed up development of its critical mineral sector. On the market side, FBM KLCI hovered around 1006 level as investors consolidate recent gains. The ringgit strengthened strongly to 4.13 against the US dollar, making it Asia's best performing currency this year. Prime Minister Anwar Ibrahim emphasized that targeted subsidy reform and prudent fiscal management have boosted confidence, while Bank Negara noted that narrowing rates differentials and strong domestic demand continue to support the currency. While global market face risk of sentiment and uncertainty from delayed US data, Malaysia ended November on a note of cautious optimism. Steady growth and strong investment and a strategic push into high-value industry, signaling a long-term competitiveness in a shifting global economy. That's a wrap for November. Thank you for tuning in. If you'd like to explore opportunities to rebalance your portfolio, connect with our RHB Bank's Premier Relationship Manager. Until then, stay informed and stay invested. See you again in our next podcast series.